Okay, now the stream is live.
Now stream is live. Welcome
Right.
everyone to another Tuesday evening show, HNC Tribe Living Las Vegas, where we talk all things affordable housing in Vegas. Well, how's everything going, Yvonne?
Oh, today has just been crazy.
Oh
Like
wow, another
so
crazy
many
day.
things going on, but I'm super thankful that we have Jared Penn, as our guest. And Jared, I don't know how to tell you this, but I go to Jared's office once in a while so I can cry. And I mean, you guys don't know that I cry, but I do.
No,
And this guy, believe me, his office is full of these boxes. You see these? I don't know what you call these, but I'm telling
tissue
you,
boxes.
yeah, he is not just a lender, but he is a tissue box supplier.
Jeez.
So, oh my gosh. Okay,
I got
I
to tell you, Yvonne, it was only once that I can remember. And here's a tip for any guys listening: just listen. That's all you got to do. You don't even have to really do anything other than just listen
Listen,
and be supportive. That's it.
Yeah. No, it's one time your office, one time at Starbucks. Oh my God, I see Jared and then my tears are coming. It's like, what the hell's wrong with me? Okay, so Jared, can you please tell our audience who are you?
Who am I?
Like, what do you do? I mean,
Uh,
other than, supplying tissue boxes, right?
so my name is Jared Penn. I'm going 22nd. This is my 22nd year in the industry. I currently manage a branch, Prosperity Lending, with my partner, Shelly Panzarella. I'm also an originating manager. Um, so I originate loans as well. Yvonne, you and I met, I think, back in 2008, 2009. Maybe before that a little bit in the builder world, but when I left the builder world in I think 2009, you were the
2000,
first
yeah.
realtor that. What's that? Can you hear me?
It was
Oh,
here.
at that time you were with Richmond American Homes.
yes. And when I left the builder industry and kind of went on my own, you were the first realtor that kind of gave me that shot. And so we've been friends ever since.
Nice.
And Jared, I mean, you were doing 40 deals a month. It was insane.
Wait, when
I
was
mean,
this?
listen,
In 40?
what's that?
Was this during 2008 or?
No, no. So, I mean, typically in a normal market, I was doing, I'd say, let's just call it 20 deals a month. During 2020 and 2021, my production did jump to like 35 to 50 a month, and that's just personal production. Those were some crazy years. They took a toll on me for sure, mentally and physically. But in a normal market, no, I was not doing 50 deals. That's a lot. I, I, I don't know
So,
who could sustain that.
out of that and that time frame, there were a lot of. You think half of those were maybe a refinance deal, or were those?
Yeah, 100%. Yeah, 2020, 2021, when rates were at 2.75. If I was doing 40 deals a month, then yeah, at least 20 of them were refinance and the other 20 would be purchase.
Wow. Okay.
Yeah.
So, Yvonne primed this question for me to ask you. Why are you're called the fixer? Is that right?
Listen, that's what she calls me. I don't brand myself the fixer.
Okay.
I do take pride in the fact that I enjoy doing mortgages and doing loans for people when other people say no. Um, of course, there's times that we can't do it, but Yvonne and I have had a pretty good track record of getting deals done. Um, and so that's why she'll call me the fixer when she'll have a problem. Even if I'm not doing the loan, sometimes she'll call me and say, hey, can we talk through this? And can I look at this differently? How can we figure this out? Um, and sometimes it's not even a loan. Sometimes it's just relaxing and calming down all parties because everybody gets
Oh,
intense when deals have issues, and so sometimes it's just stepping in and calming everybody down. And so she's labeled me her fixer. that's
Yeah.
But
A lot
again,
of that
that's
goes
not
back to
something.
just listening, right? Like you said.
Well, it's listening and understanding how human beings work, and this is a stressful time for them, and just trying to get in and try to get everybody to calm down, maybe give them a different perspective. Um, you know, Emotions can run high, as you know, Pete, and so again, it's just getting in there and kind of calming everything down a little bit, giving a different perspective, and sometimes that's really all you need.
That is so true. I mean, there are so many times that I just, when I bang my head against the wall and I'm like, why is it not working? Or how do we fix it? Or, I mean, it could be something as simple as, oh my gosh, Jared, I'm on the buy side and we have a problem. The solar company is like, not giving us a demand. I mean, simple as that. And, we waited 28 days for the demand to come in and we're still not getting the demand. And it has nothing to do with lending. And I'm like, Jared, we have this problem. I don't know how to solve it. And Jared comes up with the answer. I mean, literally, you were like, oh, that's easy. We just move this money here and we're going to do this and that. And I mean, I just see how you operate. And in my brain, I'm like, damn, how did he do that?
Well, I think the key is really when things like that happen, emotions are running high. And when you're extremely emotional, I should know this, right? That logic kind of goes out the window because your emotions are driving your decision. And so in that specific instance that you're talking about, everybody was really upset. And I think they just needed somebody to come in and go, okay, hey, I understand, sorry this has happened, but once we take the emotion out of it, here are a couple options that we can do. And I think once we do that, then people realize, okay, let me just calm down, let me relax for a little bit and let some logic back in here. We don't want to blow up a whole deal or lose earnest money or fight it out and battle it out because our emotions are running high.
Jared, honestly, I've never, ever lost a deal with you as the lender. So, it's not just all praises, but it's reality. So, for example, today I have a property that I've listed and I got a, contingent on sale offer, right? So, Pete, you've been to the property. It's a property in Mesquite. Gorgeous house. I mean, it's just absolutely gorgeous. And I basically, got the offer and I basically called Jared and I said, hey, Jared, can you please help me pre-approve the buyer? Because I know that, if I have a doubt, because, it's about trust, it's about relationships. I've known Jared for 20 years. He's never failed me, right? So I basically was like, Jared, can you do me a favor and please help me, qualify the buyer? And Jared did.
Wow.
Mm-hmm.
Sometimes it's just having that. Yeah, sometimes it's just having that peace of mind, and it's a great feeling to know that we've never lost a deal. But that's not just me. It's not just you. It's the buyers too. They have to work for it. They have to want to things to go well, and so it's like a full team effort with everybody involved. So I would say you've had some really cool, great buyers to work with, great clients to work with. So a lot of credit goes to them as well.
But I think it's about setting your expectations too, Ooh, we got Paul Patine, and he just said sometimes you need a fresh eye that makes a difference. 100%, Paul.
Yep.
100%. Yeah. And Jared, I mean, so let's talk about, the basics. What is, I mean, these days, what does your business look like? Are you doing first-time home buyers? Are you doing any new builders? Are you doing what does the percentage look like? Because I know you were very, very heavy builder, right? You were builder centric, basically. I mean, you were the backup builder for Woodside, for what was the other one?
I was a backup lender for Richmond, preferred lender for Woodside, and then at one point preferred lender for Harmony as well. I'm still open to helping anybody buying new construction. with a lot of the programs and incentives that they've offered the last couple of years, a lot of those opportunities have fallen by the wayside because you have to use their lenders for their, 3.99 or 4.99 or whatever. And most normal lenders on the streets can't offer that, right? And so
Right.
a lot of those opportunities have kind of gone to the wayside. But on the rare occasion, there is still lenders, or builders, if it falls through and their in-house lender can't do it. I'm looking at one now where we're going to try to make it work for them and kind of save that deal. Those still do come up. I still handle a good amount of refinances for my past clients and referrals, and then obviously purchase business. So I don't turn down anything. I've done HELOCs. I'll do first mortgages. I'll do jumbo. I'll do non-QM loans. I don't really do a whole lot of like foreign national or construction loans, but we do have people on our team that do, and I typically will refer those over. But yeah, I would just say we're open for business, whatever that you need,
So, Jared, can you talk about a little bit about the, how do you help people who are doing a forward commitment at the time that you were doing it?
At the time we were doing it,
let's define that, because not everybody knows what that means, right, Pete?
So
I don't know what that is.
Okay. Let's say you're in a market where rates are rising, like they were a couple of years ago, and this is what a lot of the home builders did. When we were offering 7% interest rates and Lennar was 3.5%, everybody was saying, "How did they do that?" Right? So it's called a forward commitment. They went and bought a huge block of money back when rates were really good, and they locked it all up. And so they were able to offer that basically until the money ran out. And so once the money ran out, then they bought more money and so on and so forth. And so you're starting to see some of the builders not have as good a rates now, or they're not really 30-year fixed. They're more 1-year buydowns or 2-year buydowns because the rates, that money has become expensive to get those rates now. We were doing forward commitments for Harmony a couple of years ago, was not on the level that, Richmond and Lennar and some of these other places were doing. Mm-hmm. But we were locking in, let's say 5.25 when rates were 6.5. And so we would buy down those rates, and then they would be locked in for, let's say 90 days or 120 days. So anybody coming in to buy those homes could get that rate for that house. So that would be a forward commitment, is you're locking up a rate for a certain percent or a certain amount of money to go for those homes, a standing inventory home.
By the way, Kel, she is our administrator out in Hawaii, and she goes, "Jared sounds extremely knowledgeable."
Thank you.
Yes. So what would be, like a good advice, that you would give for somebody who is, let's talk about, like the beginners, right? First time home buyers, move up buyers, and then jumbo. Is it okay if we talk about that in 3, different steps? Yeah.
I actually heard something today in a sales meeting that was quite surprising to me. And I would, we could talk about it later if you guys want to, but okay. The average age of a first time home buyer now is almost 40 years old. That was shocking to me. So obviously the advice you would give is totally different than you would have 5 or 6 years ago, right? You have people buying homes in their 20s. You're giving that person and that client different advice than you would somebody in their 40s. And then the move-up buyers in their 50s, their mid-50s. And so you're giving that person different information than you would a move-up buyer in their 30s. And so, I tend to cater it to the client. I don't just take an application and say, okay, here's your loan. I try to cater it to them. What are they looking to do? What's their expectation with the home? How long do they plan on living there? Do they have kids? Do they not? What's their job situation like? How much money are they looking to put down? But I would say, just to generalize it, it's good to talk to a lender before you start shopping, because you want to know, A, that your credit's good enough, right? B, do you have any money saved up that you can put down? Or are we looking at down payment assistance programs? How much money do they make compared to the house that they're looking at, to make sure they have a good debt ratio? And so I'd say anybody starting, just really having a good conversation with a lender or a real estate agent that's knowledgeable, to say, hey, I've never done this before. What do I need to know about? What does my situation look like?
Yeah. So if somebody does an application, they can do it over the phone with you, or they can do it via your link, right?
Yes.
Mm-hmm.
It's important to know, especially as we head into a day and age where a lot of things are AI, a lot of things are computer driven. If we're not careful, you guys are going to be out of a job one day. I'm going to be out of a job one day. And so you don't want to lose the human element to what we do. And so most people nowadays just want the online link for the application because they're busy at work and they'll fill it out when they want. Um, but we're all, I don't want to say we're all, but most of us are slow enough now where we really should be taking the time and doing the extra effort to do it over the phone. I can tell you that I learn more about a customer and how to help them by talking to them for 15 or 20 minutes on an application over the phone than I am if it comes through automatically for me and I put it together and then I have to call them to figure out what the situation is. So as we're a little bit slower as lenders, as you might be a little bit slower as a realtor, spend the time instead of sending them to our online portals to take the time and chat with them and really get to know them. And when you do, they're less likely to shop you if you get to know them, get to know their family, get to know their kids. Then you really get an understanding of how you can help that person.
Yeah, Jared, we had a phone call. Well, actually, with eXp Realty, I get a lot of referrals from agents all over the country. And I remember this particular lady, and she reached out to me and she said, "Hey, I have a client who lives in Las Vegas. He's struggled with a flip, and he could not sell his flip because the margins just dropped. So I had not enough equity, and he was living in the property and trying to fix this house, and he could not get out of the mess." And I was like, "Oh," I'm like, "This is going to be a headache for Jared." And literally, all I did was just make a phone call, and I was like, "Hey, Jared, this guy's in a pickle. We can't sell his property. There's not enough money or equity in there." And you basically said, "Oh, you know what? He just needs to refinance." Right? And I
Yeah.
was on the phone with you, Jared, and he was like, "What? Was it that easy?" It was like less than 5 minutes. And you're like, "Okay, just do this, and this." And he's been in that problem for 2 years. I
Yeah.
mean, he's literally what do you call, like he's a flipper, or what do you call those people that they sell, they buy it and then they sell it to somebody else? Wholesaler.
Okay.
Yeah.
Yeah,
Yeah.
wholesaler, right?
I think it's like one of the people listening had alluded to earlier. Sometimes you just need a fresh perspective, a fresh set of eyes. Things are changing in our industry so rapidly that a year ago you might not have been able to do something. Now you can, and so it's always good for us professionals to have conversations. And you just like you are now on your podcast, bringing that up, so that somebody listening may go, "Oh my gosh, I'm in that same situation. What
Right.
can I do?" So it's our responsibility to kind of go and share these things as you guys see them and as they get fixed, because if he's in this predicament, we know others are in this predicament, and they don't realize that they can be helped. And so I think, again, it's our responsibility to go share this information with people.
And you were able to get him out of the situation, right, Jared?
We're working on it now. I mean, he had to do some paperwork stuff that he's in the middle of doing, but once that's done, it's a pretty easy file from there. And I think it was going to save him like $1,000 a month. It was a lot of money.
It was like, I think his
Wow, that's
interest rate was
huge.
like 12% or 13% at that time. I can't remember.
Yeah. He basically got into a hard money loan on the flip that he had, and then it matured and things changed in the market and he was stuck. And so now we're having to figure out a way to refinance him down. And even though the rate could be 6.5, coming off of 12%, it's a huge savings. So, a lot of people get worried about the rates. Oh, the rates are too high. The rates are too high. But can I tell you, I've taken people from a 4% rate to a 7% rate and still save them $800 or $900 a month, because their credit cards are at 30%. Their car notes are at 11%. And so don't get stuck on the rate that you have. look at what you can possibly save. There's a lot of people out there that are in a lot of financial trouble. And the one asset that they have is the equity in their home. Why, listen, why would we tell those people to sell their home if they don't have to? Let's look at other options. And so people are they're obsessed with their 3% interest rate. And I get it. If you're in a good position, don't do anything to get rid of that rate. That's a once in a lifetime rate. But if you're drowning in debt and the credit card bills are 30%, and you got your daughter's wedding coming up and you need your ACs just went out and all that, tap into one of the resources you have, which is your home. It's a great resource too. So in that situation, that gentleman's coming from 12% to 6.5%. So for him, it's a huge savings. But sometimes I feel like people get hung up on rates too much.
Gotcha. What would be your advice to somebody who, maybe they bought their house a while ago, they do have some equity, and then, but they're like, oh, this house doesn't fit me anymore. It's too big, most likely, but the rate is so good and they can't climb the stairs. And they're like, oh, what am I going to do? You know what I mean?
A lot of square footage to clean and landscape or clean the pool.
Yeah. And they are like, but the thing is, the payment of that property is, so much more affordable than if they were to downsize. Like, I mean, you get all kinds of questions like this, don't you?
I do.
We do.
Yeah, I'm sure you guys do as well. And I'm sure you guys cater it to the client. But I mean, listen, if somebody's set up in a good position, rent the house out, because that's going to be a pure additional source of income for you for the rest of your life, right?
Right.
If your payment's $1,500 and it can be rented out for $3,000, that's additional money that you have coming in every month to go towards the new potentially higher mortgage. That would be the first thing. Is there any way that you guys can buy another home and keep this home as a rental? Mm-hmm. Well, we need the money from the equity in the home. Okay. Can we do a home equity line of credit? Rent the house out, because there could still be some positive cash flow. Use the home equity line of credit money and buy a new home and do that. And then obviously the last thing would be, selling the house. And I know, listen, it's got to be hard to let go of a 2.75% interest rate. But if you can't walk up the stairs, if you can't have a baby because there's not enough room for you, if your job, you've been transferred and your home's in, at Lake Las Vegas, and now you're working in North Las Vegas. I mean, the gas, the time away from your family. I mean, sometimes you just have to sit down and go, what's most important to me, But the first thing I would always say to anybody is, hey, can we keep this as a rental? Is there any way we can hold on to this? Because this could be generational wealth for your children.
That was really good.
Wow.
Good information. Yeah. What would be like, I mean, as far as people who, like you said, they have a lower interest rate, but then they actually refinance into a higher interest rate. And but you're saying that they could probably pay off some of their debt, their credit cards, right? Because honestly, Jared, there's so many people struggling right now.
There's a lot.
There's so many people. And I honestly think that there's like people who are being laid off, right? Like, I mean, like aren't we the hub for Spirit over here, right?
We might have been, yeah. I mean, yeah, things aren't good.
Yeah, so I kind of feel like the economic situation, it's not all peachy. I mean, I can't remember what restaurant I went to yesterday, but it was like quiet. Like I was the only one there. Yeah. OMG, I couldn't believe it. So,
which one was it?
Which one was it? I can't remember, but I was looking around and I was like, oh my God, it's 7 o'clock and nobody's here. Yeah, like it was really quiet. And then I also hear like, I am a hockey mom, right? So it's just getting harder and harder. Like I hear people grumbling, like, oh man, the income, has not kept up with the inflation. Right?
That's true. Yeah. So
Yeah. Hmm.
I think, so what I do in those situations is I tell those people, because they're upset about the rate, changing. And I say, this isn't a one stop, like we're not stopping here. This is to fix the problem that you have now. And then we're putting you on a plan. The plan, the first part of the plan is to get this debt paid off, to give you some instant relief so that you can breathe and sleep at night without concerning yourself, how am I going to pay these bills? That's the first step. Then once we do that, what I do is I monitor rates for them. And so let's say that 4% rate that's now 7, as soon as rates drop to 6, I'll refinance them. And then when they drop to 5, I'll refinance them. And then if and when they go back to 4, I'll refinance them. So that's the plan that I put my customers on. And it kind of sets their mind at ease to know, okay, man, I'm at 7% interest rate. Don't worry about that. I got you. I don't think anybody thinks, let's hope not, right? Knock on wood.
Mm-hmm.
We're not going to 12%. I think at some point, once the dust settles, we should start to go back down. So let's get you some instant relief now and then ride it back down once the interest rates drop. So I kind of put my customers on a plan.
Are you doing it on fixed rates, or are you doing it on ARMs? And what are ARMs? Please explain.
So I do fixed rates. All these scenarios are fixed rates. ARMs are adjustable rate mortgages, meaning your interest rate is lower for a shorter period of time. Let's 3 years, 5 years, 7 years. There's a good market for those, typically in the jumbo world and with credit unions. But I'd say, if I'm just being honest, which I usually am, I always am,
right?
I don't really live in that market. So if somebody approaches me and they have to have an adjustable rate mortgage, I typically send them to a credit union because I'm not their guy.
Mm-hmm.
I lived through 2008, 2009, 2010. I mean, I was in it. I saw a lot of people lose their homes, short sales, foreclosures, things like that. It takes a special person to understand an adjustable rate mortgage. It's not for everybody. And so I usually will talk them through that. And if they still feel like an ARM is the best option for them, then I'll typically say, hey, a credit union is going to be the better way to go.
Wow. Okay.
Yeah.
So
sometimes
you also
walk away from business, guys.
I know you do, Jared. I mean, honestly, why I love working with you is because, as a listing agent, right? And I'm sure that, there's going to be other realtors out here who hear me. As a listing agent, I mean, like, I love it because you actually help me and help the seller when we put in the remarks, that, hey, my lender, Jared, is willing to help the buyer, right? And by giving the buyer a 1% closing costs incentive, and some people use it, some people don't. It's up to them. But that is an advantage to me as a listing agent. That is so awesome,
Yeah. I mean, I think one thing that gets lost in our industry is, like, we're all in this together. I feel like sometimes there's walls put up between realtors and lenders, and sometimes even title companies. And we all have more in common than we like to think. And it's not our fault. I mean, I think the industry kind of sets some of these up and kind of pits us against ourselves sometimes. You're against other top realtors and whatever. But at the end of the day, you guys struggle the same, you win the same. We're all in this fight together, in this battle together. And so if I can help somebody get another deal done, even if I'm not doing the transaction, why would that ever be looked at as a bad thing? If you as a realtor could help another realtor land a deal and then teach them something, kind of pay it forward in those moments, why is that ever a bad thing? And so I think some of those walls and barriers that are in our industry, I think we have to tear those down for the betterment of our industry. The good news is I am starting to hear more conversations about that. And it's exciting to me because I think a lot of the old school way of doing real estate is going towards the wayside. And I'm starting to hear more industry leaders focus on how can we help our people mentally, physically? How can we leave this industry in a better place than what we received it in? So that being said, I know you guys are going to have to cut me off soon, right? I see the timer, but I'm going to put it on you just for a minute.
Okay.
if
No,
I
go
have a
ahead.
minute or two.
Yeah,
I
absolutely.
want to ask both of you guys, what would you change about your industry?
What would I change about our industry?
Yeah, for the better. What change would you like to see in your industry that would make your life better, your peers' lives better, your customers' lives better, lenders' lives better? What would be better for the industry?
Honestly, I kind of actually do that, Jared. Every single month, I host a mastermind for agents. And so I make it like fun. My next one is actually
Yeah,
Thursday.
Thursday.
Yeah, not tomorrow, but Thursday. And I'm just the host. So I usually am not the speaker, but I'll find like people who's done a very good job, and they're knowledgeable about something for them to share and educate, the rest of us who could improve. You know what I mean? So for
Yeah,
example, my team lead, Dylan Onaka, he closed 1,008 deals last year alone. Of course, he has teams in Hawaii, 150 agents. And in Vegas, we're almost like 20 agents, that I'm the team lead of, right? And I help organize. Not that I'm good at organizing. We have a better person who organizes. His name is Paul Fatine. But anyway, but that is my contribution, towards the betterment of our industry. And it's not just for our company, it's open to everybody. In fact, this particular event, we're going to be hosting it with Nick Chupa. He used to own a all state, I can't remember what was the name, all cell state, where they had
I
a
didn't
lot
know
of
that.
REOs, bank owned,
okay,
right?
Okay.
And now he's working for Beezer Homes, number one sales guy in Beezer Homes. And then the most amazing Brandon Johnson, but nobody knows him as Brandon Johnson. They know him as Brandon from Vegas. So he is like a social media guru, has so many followers on TikTok and also in Instagram, right, Pete?
Yeah, Instagram, TikTok, Facebook.
Yeah. Right. So basically we're going to have him come in and share his social media skills, across the board to anybody who wants to learn.
that's
So
great.
those yeah, so some of those things, I believe in collaboration over competition.
Good.
And I'll tell you recently something really annoyed me, Jared. I just get annoyed when I get an offer and in the offer, right, the agent writes a higher than normal amount to be
I
paid,
remember this.
okay? And not only did that agent write that number, because we're not talking about numbers here. It could be 1 banana, 2 banana, 3 banana, 4 banana, right? So the number of bananas that they were asking for was like, what? That's kind of beyond crazy. But not only did they do that, they wrote a paragraph underneath, in their offer. Because, I'm a listing agent. I get a lot of offers, right?
Yeah,
Oh my gosh, Jared. The agent wrote, can I read this to you? What do you
sure.
think?
Yeah,
Is it okay?
this is
Yeah.
your show. You can do whatever you
Yeah,
want.
do it. Yeah,
Okay.
put it out there.
Right. So the thing is, like, this kind of stuff annoys me because I'm like, you know what? Why are we so greedy, right? Like, we shouldn't ever, do this kind of thing because for me, the most important thing as a real estate agent is to help our clients. Clients are number one, their interest is number one, right? I mean, it's
Yeah,
not about our money, it's about their money. It's about how we can serve our clients. Yeah. So anyway, I'm going to read this to you, but I was floored when I saw this. And because I teach the agency tribe in Nevada, I shared this with the team and I said, if ever you guys write an offer like this, you're gonna you're gonna you're gonna be like, like you're gonna hear from me for sure. But I am looking for it. Okay. And this is, I mean, maybe everybody runs their team differently, but Jared, listen to this. You see
Okay.
offers all the time, right? Okay,
Yeah.
here's what it goes. The buyer has accepted my professional representation fee. Okay. And prefers not to pay it out of pocket. All right. If there is a disagreement regarding the seller's net, we request that you negotiate that within the price rather than adjusting the compensation.
So they were wanting their compensation rolled into the purchase price of their client.
Yeah. And they're basically saying, I don't care, what you're negotiating. Like, if you need a net, that the seller needs to hit a net, don't take away my bananas.
Right. Was it more than 3%?
Yes.
What was it?
It was like 4 bananas.
Okay, 4 bananas. Okay. Yeah, I mean that I could see where that
bothers
could
me,
rub me the
Jared.
wrong way. I would probably make a phone call and just talk through that with the agent and say, I'm trying to understand the reasoning behind this.
And specifically, the agent told me, please take my client's offer. She's a first-time buyer. She's a single mom. And my brain was just like, why are people doing this? They shouldn't do this.
She not that this excuses it at all, but maybe she really needed the money and she's trying to maximize every deal that she has for reasons that we just talked about where people are struggling. That doesn't make it right or acceptable whatsoever. But when people are really backed into a corner and times are tough, you kind of tend to see how they are deep down inside. And so she showed you her cards asking for, as you said, the 4 bananas instead of 3.
Yeah, I just kind of feel like it's a little bit excessive, So
it is. Yeah.
I mean, I kind of feel like the most important thing is realize that you only have a job because you're servicing your clients. And if you're not servicing your clients to the best ability, don't do the job.
Yeah.
I don't know. Am I mean?
Not at all. What I'm hearing from you is education for your fellow realtors. You put on the mastermind. You're talking to them about don't be greedy, put the customer's needs above your own. And so, my question to you is, what are you trying to do to leave the industry in a better place? You named a couple of things through education, right? So that's great. Pete, what about you? What would you change?
Well, I didn't like in the beginning how it just felt like we were all alone in this like residential world, and we had no team, no collaboration until I did join the EXP. So I like the culture, collaboration. Like you said, we do the coaching. We got Dylan's help with the Icon team, and then honestly, I like my brokerage because it has the revenue share. I kind of wish everyone else, our peers in Vegas, were more cooperative. We wouldn't have to ask for that 4 bananas or
Yep. Yeah, no, that's good.
Also, I sound like a monkey. I'm like asking for
No, I get it. I mean, listen,
this is gonna be the thumbnail for this show tonight. The bananas.
Yeah.
Hey, Lawrence King, thank you for watching. Yeah, he goes 1000%. But Jared, you're right. I mean, like, I think that as agents, we have to be, we are kind of like the source, although we don't want to be the source, but at the end of the day, we are the source. And, we need to educate, our clients, the public, I mean, I hate to see it, but, sometimes when we see the settlement statement, right, which is basically the sheet that has all the numbers from escrow, right?
Mm-hmm.
I see those numbers and I see people overcharging, I mean, can you tell us what is the rule about commissions? Can the agent be paid through a loan on that or not? Do you know it? I mean, because I'm not 100% sure about that.
Yeah, and only thing I can say is we haven't done any of those yet. I can't say that that wasn't negotiated before the contract came over to me. I mean, one way to get closing costs covered is if the seller needs to net a certain amount, then let's put up the purchase price as long as the value's there.
Yeah.
Give them the credit, the seller still nets the same. So I can't say for sure that I haven't gotten a contract or two where the realtor's commissions were kind of inflating the purchase price.
Mm-hmm.
I'll be honest with you, I don't really ever check what the realtor's making. It's really none of my business, none of my concern.
Mm-hmm. But now it's transparent, Jared. You have access to the residential purchase agreement, and if you wanted to, you literally could check.
100%. Yeah. And listen, I think it's good for the borrower or the client and the buyer to see that. I just don't ever pay. I wouldn't want somebody coming after me for my commission. I tend to just stay in my own lane with realtors commissions. But I don't know, like I've never seen it where somebody has been egregious in what they were asking for. I can't say that it hasn't happened. I've never seen it or noticed it before.
So Lawrence just said realtors, and he's a realtor as well. Realtors need to talk to each other more and communicate to take care of their clients first. 100%. I agree.
Yep.
I agree.
Yeah.
Mm-hmm. We all make a lot of money, right? For what we do. Mm-hmm. I feel like you got to have a fiduciary responsibility to your customer. That's a lot of power to have to make that kind of money. Your clients deserve for you to be on the up and up, to make sure that you're taking care of them, protect them, show them multiple houses. Don't just find one with a higher commission. I mean, I feel like that's our responsibility, for me to show multiple programs, multiple options, multiple rate options, and not just say, hey, this is what you're taking because it's easier, it's the best for me.
Jared, is there a disclosure? Because, sometimes, like, do you remember in the year 2004, right? If we can bring you back.
My time by a year.
Was it? You were what? Okay, so maybe
2005 is when I got in.
Okay, so during that time, it was crazy, Jared. Everybody was like, just get this loan. You can buy it at zero. What was that? They were all interest only loans.
They were option arm loans too. So they weren't even interest only. Some of you weren't even paying full interest. It was really bad. I got in when a lot of it was still being done, but maybe not as prevalent as like 2003 to 2004. Mm-hmm. I remember those loans for sure.
And we are like dummies, and we didn't know anything, and we signed the paperwork. That's why we had all those foreclosures. That's why we had so many short sales. In your feeling of the market, do you think that the market is going to go into more foreclosures or short sales? What do you think?
Again, this is just my personal opinion, but I don't think so at all. We've seen foreclosures and or short sales tick up a little bit, mm-hmm. but I think that's more, and hopefully I'm not offending anybody, I'm just giving you my opinion, in new construction over the last couple of years. When you're getting a 3.9% interest rate and the market's at 7%, that money's got to come from somewhere. And so I do feel like not all, some of those homes were overpriced. And so the short sales that I've seen are for people that really bought in the last couple of years new construction and now have to sell for whatever reason, mm-hmm. and their home value is not there, and their competition is still the builder. So the builder's got a brand new home that nobody's ever lived in for the same or lesser price than your house is, that's been lived in for a year or two with no backyard. It's going to cause a problem. Outside of that, everybody's got a ton of equity in their home. And I don't know what the numbers are. It's been a while since I looked, but if you bought before 2023, chances are you got a decent amount of equity in your home. And so why would you foreclose? Why would you short sell? If anything, you just sell your house and start over. So that's why I don't see it, unless there's a massive amount of inventory that I'm not familiar with that's coming.
Yeah.
I think the only problem areas are potentially new construction in the last 2 years. Outside of that, I think everybody else is good.
No, I think you're right, Jared. It is so true because I'll tell you the truth. I do have a property right now in Cadence. That's exactly what you said. And it's actually, compared to the entire community, it's like better, better situated. It has a full driveway versus a half driveway for the rest of the community. It backs up to like another community, so it has the trails in the middle. But I can't really sell it. They bought it, Jared, for
Yeah.
420,000, right? And their interest rate is like 5.5, because they got it in 2004. And now we're selling it, we're listing it at 395.
They bought it in 2004 or 2024?
2024, sorry.
Okay.
2024.
Okay.
Yeah. And I'm telling the homeowner, I'm saying like, oh, you know what? You're gonna have to act like you are, the national you're the
Yeah.
national company, and we're gonna have to give $15,000 to buy down the rate.
Yeah.
It's so true. But the other properties that I'm listing that has been on the market, like anything that I'm listing that's reasonably priced,
Mm-hmm.
I'm seeing within 2 weeks they're in escrow and they're selling. Yeah. Mm-hmm.
That's what I'm hearing as well. If I were a real estate agent and my buyer wanted to look at new construction, I would be fine with it. I knew new construction is a lot easier for a lot of real estate agents, but I would also explain to them, hey, here's what we're seeing. Here's what could happen. Let's just, for peace of mind, look maybe at some comparable resale just so that you can do the math yourself. You're still going to have a large portion of people that say, hey, I still want that brand new home. And that's fine as long as they go into it knowing the risks.
Yeah.
Similar to an adjustable rate mortgage, right? Like you got to understand the risks. And I think as long as you're doing that, there's nothing wrong with it. But if it were me, I would be showing them new construction and then comparable resales so they could see kind of how the numbers stack up.
So, okay, let's say we're going to show somebody new construction versus resale.
Mm-hmm.
Do you recommend that the buyer gets a pre-approval with the builder's lender, a regular lender?
Either way. Yeah. I mean, I like as a lender, if you sent me a client, you said, hey, they've already been pre-qualified by Lennar's lender, I would say, okay. I mean, maybe I'd ask them a few questions, but I would kind of take their word for it. I wouldn't, if they're dead set on using new construction, I would say don't waste the lender's time that can only work resale, right? So, but I'd say you could go the other way. I mean, if they're looking at Lennar or Richmond or Woodside or whoever, and their lender approves them or pre-qualifies them, and then you take that out to resale, I'm sure you'd be fine that way.
Okay, so you're saying that it's okay to work with the builder's lender first?
I think so. Yeah. If new construction is for sure on their agenda and they want to see those, there's nothing wrong with that. If they're resale, then I wouldn't do that.
Okay. Jared, can you tell us like how are you different as a lender from most other lenders? Like I mean, I know it, but what would you say? How are
It's
you
hard
different?
for me to say how I'm different than other lenders because honestly, there's some really good lenders out there. Some of them that I know really well, and they do a fantastic
Shelly's
job.
awesome. I used her in a deal.
Who's
years
that?
ago. Shelly. She was
Oh.
on 2 of mine.
Yeah, Shelly is awesome, man. She's
Got
great.
that bun cake from her, like in
Yeah, we still do those. Yeah.
We still do the bun cake.
Jared sends the bun cakes halfway through your deal, 100%.
I would say instead of saying what makes me different, because again, I don't know what everybody does, but I truly care about the customer. I want to get to know them and put them in the best situation for themselves. I'll go the extra mile. I always tell people I'm gonna be honest with you, and it might not be the news that you want to hear, but it's the news that you need to hear. And so if you're looking for a lender to just go along with your agenda and not tell them about potential issues, I'm not the guy for you. But if you're looking for a lender that truly cares like you care, you want to do well for the family. I have customers that have used me 4 or 5 times now. I'm working with their kids. That's what's special to me. Is like,
Yeah.
you know what else is funny? I have realtors that don't really send me a lot of business, but I do their personal deals because they know we're not messing around with me.
Like
well,
me.
Yvonne, you send me business though. So, but I've had realtors that don't send business. I just had one recently, and she works for a company that kind of has an in-house lender. But when it came time to do her loan, she said, nope, Jared's the only one doing my loan. And so I do take that as a compliment to know they know nobody is better for them than me. And so I do, I wish I could work with their customers more. I do understand that there are certain agreements with mortgage companies and lenders, or mortgage companies and realtors. But I do take pride in the fact that I do a lot of loans for real estate agents and their families because they know they want to work with the best. And to me, it's a compliment for them to feel like, hey, I'm the best lender that they know. And so that they entrust me with their family and their personal stuff. But again, I truly do care. I stay in contact with my clients for years to come. I send birthday cards. I'm always looking out to see if they can save any money. Anything I can do to help out. Even if I don't do their loan, I'm trying to advise them the best way that I can.
That is so true. You do that. And I've given you so much work that you've not had, you're not making money on any of those deals, but you're still spending your time helping me figure out, even like as a non-interested third party so many times. Thank you, Jared. Definitely.
Yeah. And then can I add one thing that I'd like to see changed? Because again, this is my whole going into 2026. This has kind of been my agenda is I feel like if not me, then who? I feel like we have to spread the message for people to take care of themselves mentally and physically. What we do is an extremely stressful business. And it breaks my heart every time I hear a story about a divorce or diabetes or somebody had a stroke and passed away or a heart attack, because it doesn't need to be this way. We can take a step back. We don't have to answer every phone call. We don't have to take every text message at 9:00 at night. There's a lot in our industry that teaches us how to be successful. There's a million books and podcasts out there to tell you how to make money and be successful. There's also a lot of books on burnout, but there's not a whole lot of guidance on how to handle success before the burnout. And so I feel like that's one thing that I'd like to see changed by the industry leaders at real estate companies and mortgage lenders. Don't just show your people how to be successful and lead them to burnout. Show them how to be successful, but then how to handle that success so they don't burn out, so they don't have a failed marriage, so they can be around for their families, so they don't die of a heart attack at 50 or 51 years old or have a stroke. And so that's been my personal agenda going into this year. And so I appreciate you letting me bring that up. You know me, I would have never done a podcast a year ago. And so I've done 2 in a week, literally to the day. I've done 2 because I'm able to share my agenda in trying to change this industry. And life is short. We all are blessed to be able to do what we do. We get to earn a lot of money and have a great life with our families. And for that, we pay a price. And so we need to help each other out, look out for one another, spread the word, take care of ourselves, and our mental health.
Mental health is definitely what you've been preaching for the last, I'd say, 5 years, Jared.
Because
COVID.
You can have all the money in the world, but you can't take it with you. And I can tell you that my wife and my kids don't want to be rich widows and rich orphans, right? And so they want their dad around. And so it's my responsibility to work hard, absolutely, but to take a step back, enjoy life, be smart, and look out for other people in our industry. Life is too short. So take care of yourselves on this. Anybody listening, if you know that somebody that needs help, it's your responsibility. I'm putting it on you now, especially for Mental Health Awareness Month. go help those people, be a person they can talk to, and take care of yourself.
Wow, that was deep. Thank you for sharing.
You know how I am.
Yes, we know who you are, how you are, and we so appreciate your time because it's hard to get you on the show. I mean, like you said, you've only done, 2 in your 20 plus years as a lender.
A podcast?
I've done 4 podcasts since the beginning of the year, where a year ago I would have never done them. And I may even start doing my own, just because I feel so strongly about that message that it's not about me, it's about our industry and trying to help people. And so you can get out of your comfort zone and do a lot of cool things if you don't make it about yourself and you make it about other people. And so that's been my message. It's no longer about me and me being comfortable. It's about me spreading the word and sharing the message of getting people some help and giving them some hope, and trying to leave the industry in a better place than what I got it.
That's beautiful. Jared, Lauren awesome. Says, let's go, Jared.
I appreciate it. Yeah.
Jared, are you licensed in different states? Can you just tell us real quick? Because I know that you have a program that you can help people who, if their credit is not good, you help them repair it. You also do HELOCs. We didn't even talk about that. So
yeah, we're in pretty much every state. Not me personally licensed, but my branch, my team. And honestly, Yvonne, if in 3 or 4 shows from now you want to have me back on, more than happy to come back on and talk about the things that we didn't get a chance to talk about. If anybody listening has questions, they can call me. Even if they just need somebody to talk to about mental health privately, they can call me and I'll help them however I can. But yeah, we're pretty much licensed everywhere. There's a few states that we're not, but all the big ones, all the majority of where people are kind of doing things nowadays, we're licensed.
So I'm going to confess, if you know me and if you know me within the last year, my memory is like, I kind of feel like I have a 8-second memory like a goldfish. But I'll tell you that Jared's phone number, let's go back to that screen. His phone number is 702-419-6342. And Jared's number has never changed. That is his personal cell number. And I already memorized this number for 20 years, Jared. 20 years.
Yeah.
Oh my gosh.
Same with yours. I think anybody who got a cell phone before like 2012, I know their numbers off the top of my head. After 2012, we just kind of started programming everybody. And so it just, goes away. But your number is also one that I'll always remember. So
thank you again. So appreciate you coming on. And hopefully, your message will resonate and, let's spread the love.
Yes, I appreciate you guys having me on. And anytime you want to have me on to talk about anything mortgage related or mental health related, I'm always here.
Thank you.
Thank you.
Bye, guys.
Thank you, Jared. Thank you, Ron.
Next Tuesday, 5:30, we're going to rinse and repeat. And Jared, if you have somebody else that you think should come on our show, please let us know, because there is so much that everybody can learn from. And we live in Vegas, so we want to help everybody, especially the people in Vegas. You know what I mean?
Have you ever had a trust attorney on?
No, but if you want to, connect us, I would love it.
I'll keep an eye out. I think that'd be great for you to have on your platform as a trust attorney, because there's a lot of good information.
Awesome.
Yep, I agree.
Bye, guys.
Bye.
Thank you, guys.